Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, having rebounded on Friday, the Australian dollar has paused at the 60-day simple moving average, a key point, and keep an eye on this level as we see a break above there would give further indication to the bullish case and look on towards a potential target of 66 cents, with the immediate target seen around 65.5. Any pullback is likely to be shallow, with support seen around 64.35 to 70. Turning to the euro, after a bullish outside range day, the market gave back a lot of its gains overnight. The sentiment shifted after the Fed Chairman Jerome Powell used his Jackson Hole speech to scrap the make-up inflation strategy and commit to a flexible inflation targeting framework. Powell also flagged that downside risks to the labour market are rising, while stressing that tariff-related inflation impacts are likely to be temporary. His dovish tone sent the US dollar tumbling to a low of 97.65, which has now recovered. Looking to this week, all eyes will be on the Australian CPI and the Fed's preferred inflation measure, which is the US Core PCE price index. The mixed price action we can see here for the euro. Keep an eye on the support level, which is seen roughly around 115.65.75, as we could see a bounce there, and if so, look for a correction. The engulfing candle still intact at the moment, but nevertheless there is a little bit of nervous play here after the Friday's price action, but overall I still feel that 118 is on the cards. The dollar yen, well, after posting an engulfing candle, has retraced half of its losses, but still lacking technical support. Therefore I still feel the risk is still to the downside. As this sideways pattern continues, that 145 should be challenged and eventually see from there if we can go lower or see a correction. Friday's engulfing candle saw the sterling also give back some of its gains, and now looking back towards the support region, seen at around of 134.65. But I still feel, in light of how the market's been performing, the upside risk is still there towards 136 and reassess. Wrapping up with commodities, the engulfing candle for gold still holds and still lacking any type of supply that could send the market lower, and therefore could see a rally onto the region of 3,370 and with more further scope towards 3,400. And oil still remaining very strong as it rallies for its fourth consecutive day and still on track to reach the target around $65 to $66 a barrel. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoyed the great start to the day.